let's see. Cool. Perfect. Yeah, so feel free to drop any kind of questions you have in the chat box, but I'm gonna really get straight into this, right? So what we wanna do first and foremost, right? Is there a question already? Let me check this real quick. Oh, that's not a question. Oh, can I drop the bootcamp link? Yes, I can. Say no more. What I'll do is I'll drop that at the end of the call, real quick, because I'm just gonna really go ahead and dive straight in. As I said, just make sure that you have plugged in. In fact, you know, I'll go right here. Let me just drop it now. Make sure you plugged into this before even necessarily thinking about even applying this, just because it's probably going to be a bit confusing. If you want to stay on the call, it's fine. Where's the chat box? Let me find the chat box real quick. Boom. Chat box right here. All right, cool. Here's the link, right, for anyone that doesn't have it. Here's the link for anyone that doesn't have it. But what I'm going to do is I'm going to go into the Harmonic Scanner, right? Once you open the Harmonic Scanner, right, the first and foremost thing that you want to do is you want to select your broker. For anyone that hasn't used the Harmonic Scanner before, the way to find it is literally just going to be to go to your back office, press Harmonics, press right here, and the Harmonic Scanner is going to come up, right? What you're going to find, just as a very, very basic introduction, just in case we do have some people in the school that haven't actually used the Harmonic Scanner before, what you're going to want to do is you're going to want to come to where it says this, right? This is where you're going to be able to select the broker that you're actually using, right? So we've got the brokers here, we've got the timeframes here. For this specific trade strategy or trade kind of like way of trading, we're looking at the 1 hour time frame, and we're also looking at the 4 hour time frame, right? I'd like a lot of people like to trade with 50 minutes and that kind of stuff. For this specific style, that's not the time frame that we're using, right? So on the H1 time frame, which broker are we selecting? The ones that I like to use personally, and by the way, I see questions coming in the chat. I can't see them right now, but what I'm going to do is I'm going to go through this and I'm going to come back to the questions. So keep writing them. I'm not ignoring them, but check this out. The first broker that I like to use is FX Choice. The second broker I like to use, not in order by the way, but it's FX Choice. It's which other ones? XM.com and also Hot Forex, right? I only personally like to use those three. The others are fine as well, but personally the reason I use these three is because these three are the regulated brokers that are on the platform. The others are cool. They're not regulated. Sometimes the prices can be a little bit different. So I just personally like to favor the regulated brokers, right? This isn't too much of a thing to focus on. If you want to use the others, you can. I normally stick to FX Choice, right? So with that being said, that's the basics out the way, right? We don't really need this RSI on the chart. If you just double click on your screen, you're going to be able to get rid of those RSI, right? Check this out. Let's say we have just opened the Harmonic Scanner. What are we looking for? We're going to come on the most recent currency pairs. This is going to be the most recent trades. In fact, let's have a look at this. Oh, that's not really valid yet. But this is going to be the most recent trades, right? The lower down you go, the older the trades are. But what we're looking for, I'm going to go for maybe some older examples to really show you and see what's good. Let me see which examples I can find here, because I'm going to show you a step-by-step way that we can go ahead and use smart money concepts within the Harmonic Scanner in order to go ahead and increase our profitability ratio, right? The first and foremost thing that I want to do, as I open the Harmonic Scanner, as I've gone in the 1 hour or the 4 hour time frame, the first thing I'm looking for, right, number one, is a wick rejection off of the entry price, right? That's number one. And honestly, if you want to keep this simple, you can actually just enter off of the wick rejection off of the entry price, right? I actually like to do that. Like if, let's say for example, it's like I'm not really bothering to look at trading view and all that kind of stuff. I'm just like, cool, you know what, I'm gonna enter. Like I don't mind just entering after the wick rejection, right? What do I mean by a wick rejection? I basically treat the entry price basically like a resistance or support line, and I'm just looking to see some kind of rejection off of it to go ahead and give us an indication that the market is actually about to reverse. Because one thing that I've observed about the Harmonic Scanner, and for anyone that's utilized this before, you may be able to reflect and realize that this is a fact, is that a lot of the times, most of the times in fact, when this does hit stop loss, it typically never gave us any signs. Like it never started going in the opposite direction. Like most of the time when it hits stop loss, it just keeps going up, right? You won't see any kind of reversal. If I can find some examples now, let's have a look if we can find something that hits stop loss. Let's see. ADJPY. Okay, cool. This one hits stop loss, for example, right? In fact, you know, I'm going to come to that example after, all right? Let's have a look at, let's see. Okay, cool. This one hits stop loss. You see how we had no rejection coming towards the direction that we wanted it to come. It just kept going up, kept going up, kept going up. You might say, oh, here's a wick rejection. But what I mean when I say wick rejection is not only the wick, but I also want to see a candle close in the direction that we're actually looking for. So if we're on the H1 time frame, I'm looking for a 1 hour candle, right? So for example, for a sell, I'm looking for a 1 hour bearish candle, right? Hopefully that's making sense so far, right? So let's go back to that example. I don't remember which one I was on, but I'll just scroll through and let's see. Okay, cool. Even here, right? Look at this. there was no wick rejection, right? And just, I really want to clear this up so people are understanding what exactly I mean. You might see this candle here and you might be like, is that not a wick rejection? No, because why? The wick didn't reject off of the entry price. So this specific candle, you know how we've got two entry lines on this specific example? This specific one, after this candle closed above this entry line, the only way I would be looking to catch this trade is if we get a wick rejection off of this entry line and we get a bearish candle closing red, right? Closing down, closing going the direction that we actually want it to go. So here, did we get that? No, right? Then it came up and I actually went ahead and hit stop loss. And then it actually came down and came to TP as well, right? Understand, by the way, one thing I'll say about this style is that with this style, you may miss, in fact, you will miss some of the trades. Like, you're not going to catch all of the trades on the Harmonic Scanner, right? But the reason I like it is because the success rate that I've found personally for myself is that it tends to be significantly high, right? Significantly high. So for example, here, we've got Euro JPY. I think this is the one that I don't even know. But we see that we have a wick rejection and we have a bearish candle close. So now what we can do is we can go ahead and enter that trade, right? We can go ahead and say, okay, cool, look, we've got the wick rejection, we've got the 1 hour candle, right? Now we're going to enter. What I normally like to go for is I personally like to go for take profit 2, right? If you want to go for any of the other take profits, that's fine. But what I found for myself is that take profit 2 tends to be a zone that gets respect to a lot. Sometimes it will hit take profit 2 and reverse off. Sometimes it will hit take profit 1 and come back up. But what I like to do is as soon as take profit 1 is hit, right, I'll normally set an alert on my trading view, right? And I will move stop loss to break even as soon as take profit 1 is hit, right? So now what you can do, and I'm going to get into how you can use institutional trading with this as well. We haven't got to that yet. Some of you guys are probably thinking this ain't institutional, right? But look, what you can do, there's 2 ways that you can set your stop loss, right? The way that I like to do it is maybe seen as a slightly riskier way, but it just gives it a little bit better of a risk to reward, right? I put my stop loss just above the wick rejection, right? So for example, we see here, we have the wick rejection here. And my stop loss is going just above that wick rejection, right? And then my take profit again is that take profit 2. So this would have been a trade that we could have went ahead and profited on, right? If you want to be extra safe and extra cautious, you can if you want. I don't personally do this ever, really and truly, but if you wanted to, you could put your stop loss up there if you wanted to. By the way I see it for me personally, if the market is already rejecting, a lot of the times it's likely to move and go at least to take profit 2, right? And if it comes back up, I don't mind because what? We're using risk management, right? We're using risk management. But by the way, just real quick, let me hop on the chat box and check these questions real quick. Okay, cool. Broker for MT4. Broker for MT4, you can use whatever broker you want. Like, it depends on like what country you're from as well. Like, I like Welcome Dominica. I like IC markets. I like IC markets for like just normal forex. So that's what I'll say. What if the broker is not there? The broker will be there. Yeah, the broker will be there. Like, these brokers are always there on the platform. Like, they're always there. So just if you just select one, you'll find it, right? But with that being said, though, is this just so far before I proceed into the slightly more advanced stuff? Wait, which video should we watch? Should we watch to learn that with the wick rejection? Which video to watch? I don't know necessarily specific video. I guess Joshua Walls, right? If you go to go live, right? If you go to go live, there's a video by Joshua Walls where he goes into different ways of utilizing candlesticks, right? Literally in the basic section. For anyone that's like confused about understanding a wick rejection, you can literally come here, right? And you can go to Joshua Walls, all right? Joshua Walls, where's he at? Joshua Walls, let me see if I can find a video for you because I've literally got a link saved. If you message me privately, like after the call, whatever, I can send you a direct link. But other than that, there's multiple examples here. So if you go to his favorite sessions, he's got a video called Candlestick. In that video, he will go into it in quite a bit of detail, right? So let's go ahead and exit that. Let's go back to the chat real quick. Oh yeah, by the way, also, just as a simple explanation of how to use the wick rejection, all I'm looking for, right? All I'm looking for is, maybe I didn't explain that efficiently, right? All I'm looking for is for the wick. So if the candle body closes above the entry price for a sell, then the trade is no longer valid unless it goes to the other entry price, right? If the candle, right, you see that thin line, obviously that's the wick. If we have that wick rejection, so the market has attempted to come through the entry price. This is what it's telling me. It's telling me that the market has attempted to come through the entry price, but it hasn't been able to do so, and it's closed in the direction we want it to. For me, like, that's enough for me to have a general bias of where the market is about to go next, right? That's what I look for, right? If the candle is like, let's say for example, it's a bearish candle, but it's like very tiny, and this candle is like strong. So for example, let's say we've got this candle right here, right? A pretty strong candle going to the upside, right? And then we've got let's say we had a small candle, let's say we had a candle like this right here. I wouldn't really count that. Do you get what I'm saying? Because we have a longer wick at the bottom, we have a thin body. I don't really like those kind of candles too much. I like to see a candle with a bit of meat that is just showing it, right? As you kind of practice through it, you kind of get used to that. But hopefully that kind of makes sense of it. Let me check the chat box again real quick because I want to make sure that everyone's understanding this before I proceed, because it's like the first step. I am Academy Bootcamp. Yeah. So Manny Kinones, I'm sure you probably go through this there as well. Wick rejection. Sadia, let me know if that explanation made sense about wick rejection now. Of the entry price ranks. Okay, cool. Set 2 entries. Yeah, so you see, for example, like some of the Harmonic Scanner trades, like some of them they will have 1 entry, and some of them they will have 2 entries, right? So as an example, this specific one has 2, right? So what I would do when there's 2 entries is I would just wait for a wick rejection of one of the entries. So that might be off this one, that might be off the higher one. It doesn't really matter, right? But the first wick rejection that I see, or even if it's second one, if it breaks through this one but it rejects the second one, I can go ahead and I can enter that trade, right? Guys, if that's making sense so far, okay, cool. Can we go in? Yes, exactly. That's what I'm going to break down next in terms of going to smaller time frames and stuff. But if that's making sense so far in terms of waiting for the wick rejection to give you the confirmation that the harmonic trade is likely to go in the right direction, drop a 2 in the chat box real quick, just so that I kind of know. And if you're confused about something, then again, like write your question. Like no question, don't think any question is like a dumb question. Just ask any question. You just want to message it privately. I don't mind. I just want to make sure that every single person is like understanding what I'm speaking about. But yeah, so perfect. Now, after that, right, this is where we can now start to go ahead and look at how we can go into lower time frames for more specific entries, right? How do you know when to buy or sell on MT4 when you get this signal? All right, cool. So when it comes down to it, just to explain this on a simple level, right? The Harmonic Scanner, like some people, they talk about the D and all that kind of stuff. The way I explain it is simply as this, right? We have the stop loss. What is a stop loss? Stop loss is something that you're not looking to go to, right? Stop loss is where your trade is going in the wrong direction, so you're restricting your loss there, right? That's why it's a red line. So wherever you see the red line, you want to trade against the red line. See the red line as lava. So let's say, for example, looking to, like we see this right here, what are we looking to enter? The entry price is here, the take profits are down there. We want to get closer to the take profits and away from the stop loss, which means that we want to sell. Because if we expect the market to go down, we want to sell, right? The opposite would be true for a buy, right? Hopefully that makes sense. Now, when it comes down to going down to the lower time frames, right? When it comes down to going down to lower time frames, the number one thing to understand, not the number one, but the first thing to understand is market structure, right? Just basic market structure, right? The market goes high, then it goes low, then it goes lower high, lower low, lower high, lower low, lower high, lower low in a downtrend. What do I mean by that? Just as a basic example, in fact, you know what? Let's go ahead and let's just load up something. Let's just clear this, right? So let's say we come over here, right? And we've got, I don't know, we've got this. Let's go ahead and block this as well. So let's say we've got a little something going on like this. All right, let's see what's good. All right, cool. So let's say the market is coming up, right? So it's starting here and it's coming up, right? And then it's coming down. Wait, let's say it comes down a little bit lower than that. So it's coming down like this, sorry, a little bit higher. Then it's coming up, right? What this is, again, this is like basic. I'm gonna get into like slightly more advanced as well. But what this is just showing you that we're in what? An uptrend, right? But let's say, for example, like just so that we really understand how to identify a shift in the market structure, because this is what we're really going to be looking. What we're looking for in the Harmonic Scanner, when we're looking for these lower time frame entries, is we're looking for a break of structure, right? We're looking for a break of structure. What does that mean, right? In this specific case, right? In this specific case, we're in this market where we have the high, we have the low, we have the higher high, we have the higher low, then we have the high, and then we've come back down, right? And now what we're looking for, in order for me to classify something as having broken structure to the downside, because what we're looking for, again, like on the Harmonic Scanner, for example, you can see that it was going up. So what we're going to do when we come down to the lower time frames is we're going to look for signs that the market structure is breaking and that is ready to come down, right? As we do that, right, what we're going to be looking for is going to be a break of the most recent low, right? A break of the most recent low. So for example, as soon as this comes down to here, we can start looking for entries for the sell, right? Sorry, right? Hopefully that makes sense. So those are the first two things I'm looking for, right? A candle break And understand again, if you want to keep things basic and simple, you can enter just off this, right? You can enter just off this and catch maybe like a 1 to 2, sometimes even 1 to 3, sometimes 1 to 5, sometimes 1 to 10, just from like this, right? It's rarer for a 1 to 10, like just based on this, by the way. But then, if you want to go into even more detail, so what currency? This is Euro JPY, Euro JPY. So let's say we come to Euro JPY. Let's see what we can find. All right, let's go ahead and clear this. All right, come down to Euro JPY. Let's see, what time was this? This was at, is this the right time? Let me change my time zone here. By the way, just as a side note, not really that important, but like if your times on Harmonic Scanner aren't necessarily the same as your trading view, just make sure you know how to just change the time zone if you're looking for a particular point in the market. So for example here, what do we have? We've got, what time is that? That's around 7 a.m., right? So around 7 a.m. So what we can see is that this candle closed, right? This candle closed at 8 a.m., right? So we're looking for entries after around 8 a.m. because that's when we had that reversal, right? So that's what I'll be looking at. So first and foremost, I might just enter like that just in case, because sometimes the market can reject, but you might not actually get that re-entry based on the institutional kind of level. Sometimes the market might just move a little bit too fast, right? So that's why sometimes I don't mind entering those kind of trades. But what time frame I'm going to go down to is I'm going to go down to like the 5-minute time frame first and foremost to be able to identify what the structure is looking like. So let's find that price. I believe it was around about here, 24 August. Let me just double check the date. Is that the right date? 19th of August. Okay, cool. 19th of August. So we're looking at around about, we're looking at around about here, right? So if we're looking at around about here, I'm really looking at a 1-minute time frame. The reason being is because I think I might have explained this example in the video that I recorded, I don't know. But the reason being is because I'm looking for clear structure. So a little something where you can see clear highs, clear lows. Right here, it's not really so clear to me. It's not really so clear to me personally, right? So understand also, like one thing I would say as well is like, I wouldn't even really say like I'm like some beast institutional trader. Like the confirmation that I'm going to tell you right now, they're actually like pretty basic confirmations when it comes down to institutional trading. I don't even look at things like whack off or wick off or whatever you want to call it or anything like that. But I find that it's effective, right? I find that it's effective. So let's say for example here, right? Let's say for example here, what I'm seeing here is that the market's coming up, right? So you've got high, low, high, low, high, low, high, right? Low, high. So now I've identified this as the most recent low, right? I've identified this as the most recent low. Why would I not class, for example, this as a low and maybe cut some entries around here? Reason I wouldn't personally class this as a low is because it hasn't really broken the high after, right? The way that I classify a low is if the low has produced a new high. Like hopefully that makes sense. So here, for example, this low produced a new high because it broke out of this high, right? Here, this low didn't produce a new high. It didn't come above that high. So we wouldn't have been looking to enter there. What we're looking for is for the market to go ahead and break. Let's come down to, let me just draw this here, right? For the market, and don't worry, I'm going to get to the question as well. For the market to go ahead and break this specific level, right? This specific level right here. So what I'm going to do is I'm actually going to go to, like what I normally do is I will start on the 5-minute time frame. I'll see if I see anything clear. It's not really a thing where we have to be overthinking the charts. I'm not even going to lie to you. It's just literally a thing where we just look at it on a 5-minute time frame, see if there's something nice. Okay, cool. There's something, oh no, this is the 3-minute time frame. But on the 5-minute time frame, there wasn't something nice. But on the 3-minute time frame, we can see, okay, cool. Let's wait for a breakout here, right? We have some breakout, right? We had the breakout on the 1-minute time frame specifically. We had a lot of breakout there. We have more breakouts here. What am I classifying as a breakout? Literally a candle close below that level, right? So a candle close below that level, not a wick rejection, a candle close below that level. So you can see that these candles are closing, the candles are closing below the level in the 1-minute time frame. So this is enough for me to say, cool, I'm looking for some kind of institutional sales. I'm looking for some kind of, so now I'm just going to look for the entry points, right? So again, just as a summary, number one, we're opening up the Harmonic Scanner, right? And we're looking at the 1 hour or the 4-hour time frame, right? On the 1-hour time frame, or on whatever it is, but mostly the 1-hour time frame, you're going to see more sell. So on the 1-hour time frame, right, we're selecting the broker, but what we're looking for is the wick rejection. After we identify that wick rejection, which was again, that candle was at 7, so that candle finished at 8, right? That candle finished at 8, which means that we're looking to catch those entries around about this kind of time, right? Around about this kind of time, right? So what does that mean? We see the third thing that we're looking for is really some kind of manipulation candle, right? What we call institutional candles. And by the way, just to really point something out real quick that I don't feel like I explained efficiently, is that you can wait for the wick rejection, or you can wait for a market structure break, right? Obviously, having the wick rejection, I feel like having the wick rejection to me is a stronger confirmation. But if we're seeing that it is starting to reject off, all that kind of stuff, and we're seeing that the market structure is showing that it is ready to reverse on the lower time frames, we can still go ahead and catch those entries. It's slightly more risky, but even what I like to do when I'm entering institutional entries, especially like with the Harmonic Scanner or whatever, I'm entering low risk positions. So let's say, for example, you normally risk 3%. I would recommend risking 1%. Let's say you normally risk like 2%, you can risk like 0.5% or 1%. The reason being is because I don't really care too much about if this specific trade is going to be the one that banks. Because I know that if I've got the bias of the market, I'm going to get some kind of entry most of the time. Do you get what I'm saying? So what does that mean? That means that here specifically, for example, and again, this is assuming that you guys are plugged into the institutional trading course and that kind of stuff, there's different types of institutional candles, right? One is really just where you have that last buy before that significant down move. So we have that here, right? We have this last buy before this significant down move, right? Now, what we see is that we had literally came up to there and rejected. So if we were looking to enter based off this, what would we have done? I would have personally looked to enter around the entry of the body. I normally like to enter just below the entry of the body just because I know it reduces the risk reward a little bit, but sometimes it doesn't come all the way up to the body. So I like to just enter just below, right? Just below. So I might enter there, stop loss just above the wick, right? Just above the wick. You could put it a little bit higher if you wanted to. Maybe put it like here or whatever. But then for take profit, I believe someone asked in the chat as well, which TP? I go for TP2, right? So I go for TP2. So if that's the case, what's TP2 here? 125.7633, right? 125.7633. So I'm just going to drag this down. 125.76. 0.76, cool. So something like that. I put it like slightly higher just because it's kind of long. But yeah. So now we have just under a 1 to 10 risk to reward ratio, simply just from looking at those few confirmations on the Harmonic scan, right? So if that's making sense so far, and I will go through more examples. I'll go through like all the examples that are there. If that's making sense so far, drop a 3 in the chat box while I'm reading this question. Big risk to reward. Let's go. Shout out Alfie. Isn't the BOS with the bodies of the candles? Isn't the BOS? Yeah, that's what I'm looking for. So I look for a breakout in terms of like a candle closure. I don't know if that answers that question, but yeah, cool. So it's making sense. Again, guys, just drop those questions. How do you get that red and green risk reward box? Okay, cool. Simply, as you come right here, right? If you're going for a sell, you're looking for a short position. If you're going for a buy, you're looking for a long position. You press those and it will come up. You can put your stop loss and take profit, all that kind of stuff, right? Let's go through. In fact, would you guys like me to go through another example? Okay, let me know. Let me know if you want me to go through another example. All right, please repeat. I'm not sure. Okay, cool. The spot box. All right, cool. Literally for the spot box, all you need to do is come right here on TradingView, right? There's a little section here that you will see. As you play around with these, you'll find it. For the long position, long position is going to be the one you're going to select when you're looking for a buy, right? A short position is going to be the one you're going to select when you're looking for a sell, right? Hopefully that makes sense. For the rejection of the entry price, do you wait for 2 candles? One, just one candle, but it just has to be a candle closing in that direction. So for example, here, like this, there was a wick rejection, but it didn't close in the direction, right? So the reason I wait for it to close in the direction is because that's showing me that the market is starting to move in that direction. So I could either wait for that, or I could just wait for a breakout on market structure. Personally, I prefer for the wick rejection to have already occurred. But let's say, for example, this candle closed at 8 a.m., right? So if we waited for the whole wick, for the whole candle to close, right? Then we would have caught a little bit of a late entry. We would have missed that entry, but we still could have caught this entry just simply based on market structure, right? However, let's say we did miss the entry again. Like there will be more entries to enter. We could have, for example, come down here and maybe caught an entry right here based on this last buy before that significant sell down, and we could have caught a smaller trade. This one would have been a smaller and shorter term position, probably maybe like a 1 to 3 or something like that. But yeah, there's always something you can catch, like a 1 to 4, right? There's always something you can catch. So let's go for another example. You guys are asking for another example, right? Let's see. Let me just go again. Like I like FX Trace, so I'm gonna just stay on FX Trace. Normally I just stay on FX Trace. Understand also again, like this is really a style that you won't necessarily see setups on all the time. Do you get what I'm saying? Like there won't really be setups all the time. Like But as they come, like, they're pretty accurate, typically. They're pretty accurate, especially like as you're utilizing your skill set within institutional trading. In fact, I'm gonna go for every single one of these, right? I'm looking at EuroCAD, right? Look at EuroCAD, it hasn't hit the entry price, right? It hasn't hit the entry price. Like I'm not really gonna do this training and just like skip through something. I'm gonna go through I'll go through every single one of them. I don't really mind, right? And I'm gonna break down whether I would enter, whether I wouldn't, whatever it is. Like hopefully, I don't know how long the training will be or whatever. It shouldn't be too long, but hopefully that just adds value, right? Because what I'll look for here is this will probably continue to go up, but I'm not entering. Why? Because it hasn't hit the entry price. It has to hit the entry price. Like, it's all about being strict with it. Like, understand, sometimes you might miss a trade, right? Doesn't matter. It doesn't, like, even if you're trading your own way or whatever, if you miss trades, it doesn't matter. Like, there's the market revenue is like 6.6 trillion a day. Doesn't matter. You get what I'm saying? Like, there's always more entries to enter. So as we really understand that, we can trade with an abundance mentality.
Zeki, I swear, I'm going to tell you to go to daddy in a minute. Stop licking. It's disgusting.
Before you remember that, I'm going to go ahead and just make sure everyone kind of mute themselves. Damn. But anyways, right? Check this out. Here specifically, again, we wouldn't have entered this. I think I went through this one already, right? We had a wick rejection, but we didn't have a candle close in the right direction, right? Euro GBP. Euro GBP. What do we have here? See, like you might have thought, oh, this is a wick rejection, but no, the candle didn't close in the right direction. Well, what are we looking for? We have the stop loss below, so we're aiming to go away from the stop loss. So we're looking for a buy, but we don't have that wick rejection, right? We don't have that wick rejection. So next, AUD CAD, right? AUD CAD, yo, this was a sweet one. This was actually a sweet one. So check this out. AUD CAD, what do we have? We have stop loss is below, right? Stop loss is way below. Stop loss is below, so we're looking for what? A buy, right? And this is the thing. You don't need to put your stop loss all the way down there when you're utilizing this style. Because now what do we see? We see that we have a wick rejection, right? So now we could simply just enter just from the wick rejection. Sorry, you know what? This is a good example for me to show you something actually. It's not necessarily going to only be the candle that actually rejects from a wick that is going to be the one that is closing the right direction. What do I mean by that? This specific one, you see that the wick touched the entry price, but it was still a red candle. So that's not valid to enter yet, right? But if the candle straight after that closes in the right direction, I'm comfortable to enter. So for example here, we had the wick rejection and then we had the candle closing in the right direction. This specific one didn't hit the entry price, but I still count it because the wick rejection was on the previous candle. Hopefully that makes sense. So then we could just enter literally right there, go up, right? Take that to TP2. We will still be in this necessarily now. After this comes to TP1, you can move stop loss to break even as an example, right? And then I'm going to go into institutional as well. So that would be like a decent little 1 to 3, right? Let's say we want to hop on the chart. Let me check what time this is so we can look at entries. 5 p.m. So this would have been 6 p.m. 6 p.m. would have been the time that it would have been valid to look at this trade, unless we looked for some market structure break just without that, right? But let's have a look. AUD CAD, 6 a.m., right? Let's double check. Oh, no, 6 p.m. 6 p.m. All right, cool. 6 p.m. Let's find this real quick. AUD CAD. So AUD CAD, right? Let's come over here and let's have a look at what is good. All right, cool. So this right here is 4. So we're looking for around about 6, right? So around about 6. So 6 is really where that candle broke, right? Let me just double check the times again just to make sure. Okay, cool. 6 p.m. Yeah, so 6 p.m. 6 p.m. Oh no, wait, it was actually, yeah, 6 p.m. So the start of 6 p.m., perfect. So 6 p.m., right? That I'm gonna draw a line there just so we kind of understand that that's really after we had that wick rejection. That's really where we had the strongest confirmation to enter. That was around about here, all right? Around about here. So now what do we do? So again, I will look on the 5-minute time frame at first. 5-minute time frame, we're looking for some kind of break of structure, right? So what do we have? We have all of this right here, right? All of this right here. We're looking for this. I'm looking for this whole thing to be broken, to be honest with you. I'm looking for this whole thing to be broken. It's like, technically, like some people might have just entered here based on this last sell before that push up. Personally, I probably wouldn't have, just because that, I wouldn't really count that as a break of structure personally. So I'm saying like, yeah, cool, it went up and it would have been a better entry than anything else that you might have looked for. But again, like I'm really looking just to make sure that we have that break of structure first. You know what I'm saying? However, though, at the same time, remember I said that we can really, when it comes down to the breakup structure, doesn't just have to be the wick rejection, but it also doesn't just have to be the breakup structure on the lower time frames, right? Because understand again, remember I said that the wick rejection is enough to enter the trade. So what does that mean? Here we had the wick rejection, so we could actually go ahead and still enter this trade, right? Hopefully that's making sense. And why would you enter this trade? Again, I'm not going to go into too much detail about how institutional works on that kind of stuff, because I'm guessing a lot of people can see that this is an institutional candle. Like as in we had that last push down, then we literally came up significantly. So what does that mean, right? The candle, the wick rejection candle was there. So what would we be looking for? We'd be looking for the market to come back there, mitigate that specific level, and then we could potentially go ahead and enter that for a buy, right? With a stop loss. Again, I'll put it just below the wick, right? Let's say we did that. Where's our TP? And I'll go through some, I'll look for some other entries as well. But let's say we go for TP, 0.95167, right? 0.95167, 0.95, 0.95167. I'm gonna do it a little bit lower anyways, just because that's long. But yeah, basically, what do we have here? Nice little 1 to 12, right? Nice little 1 to 12, right? We'll still necessarily be in that trade. You can see that that's minimal drawdown. That's minimal drawdown. And the crazy thing about it is that we could have caught other entries as well. So let's say, for example, you're like, nah, you know what? I want to be a bit more safe, because this one, like, just based on how this was moving, like, it would have been a bit of a one where it would have been like, slightly riskier one, slightly riskier, simply because we didn't have that breakup structure. If we have both, it's an even stronger confirmation, but we can still enter with just one confirmation of the market moving in the direction. What do I mean by the confirmations of the market moving in the right direction? Again, wick rejection or a breakup structure, both is even stronger. Here we had one, but let's say we wanted to wait for that wick rejection, even on the 5-minute time frame, like we could have still caught some kind of entry, right? What am I looking for? Again, I really just keep it simple. I'm just looking for the last sell before the buy, the last down candle before the up candle, and I'm just looking to catch some kind of entry there. So as an example, let me delete that because we can't understand that. As an example, what do we have here? That was that last down candle before the up candle. So I would literally mark it up here, right? And I'll potentially be looking to enter there. We didn't come down to there. But then guess what? We had this candle as well, right? This last down candle before the up candle. We had a significant move up. So now I'm looking at that level, right? I don't mind because, it could potentially come down to there. But again, that's why I do like a lower risk. But because the risk reward is still high, it's still nice. Do you get what I'm saying? So now we could look to capture this entry, stop loss, just below this specific thing. I believe some people like to call that order block or whatever. I just call it institutional candle. I just keep things simple. But let's say, for example, we did that. Where's the TP again? I should have left it on. TP 0.95167, right? 0.95167. So again, let's drag that up. 0.95167. 0.95167. Okay, cool, perfect. So you can see, that would have even been a better risk to reward ratio just by waiting for that market structure break. And this is only on the 5-minute time frame as well. If I see something on the 5-minute, then I'll go for it on the 5-minute. If I'm not really seeing too much, then I'll go on like the 1 minute. You know what I'm saying? I'll go on the lower time frames to really catch some entry, right? So if I was on the lower time frames, again, like I'll look for multiple entries. Like for example, here, a slight little institutional candle, I would enter there. Like I would enter there and firm the stop loss. Like for example, here right now, you can see, let me just draw the line just so it's more visual as well. You can see that we had this little institutional candle, right? Pushed down, came up. I would just enter. I don't overthink it. If I just see an institutional candle, I'll just enter. Because we already have the bias of where the market's likely to go, I'll put my stop loss just below that candle, and then boom. Again, like I would look to take it up. This one would hit stop loss, but guess what? We caught a re-entry over here, right? In fact, I like this candle as well, right? This candle as well, last sell before the up, right? And obviously, it's not just any random last sell before the up. What I'm looking for, by the way, one thing that I didn't actually clarify, which I look for but I didn't explain, is I only really look like it's only valid when there's imbalance, right? It's only valid when there's imbalance. The way that I like to do it. So basically, this one there's imbalance right here, right? Hopefully, this is making sense. So there's imbalance right there. So that's why I'm like, cool. Like I would have entered that. And I don't mind. I confirm the stop loss there. Like some trades are gonna hit stop loss. It's not that deep, right? Next thing, we've got this one. Where's the imbalance? We've got imbalance right here, right? Like as in from this candle to here, then it kind of came down here. So we had imbalance right there. So what I would be doing is looking for an entry, maybe at the body. Personally, I wouldn't even enter at the body because sometimes it doesn't come all the way down to the body. It goes to the imbalance. So I literally would put my entry around about here, right? Around about here, stop loss just below there, right? Just below that, just below the institutional candle. And then again, we take it up to the same level. So now it's just increasing the risk reward, increasing the risk reward, increasing the risk reward, right? So what's that? I can't even see what that one is. Let me do this one. Jeez. 1 to like 27, right? So literally just from that, you know what I'm saying? Just from that, like as in you gotta understand like this stuff, it's kind of mad. Like this is why it doesn't like, one thing I would say when it comes down to the strategy, like if you want, like I know some people are definitely like on this call, some people are crushed in institutional trading. Like some people on this call are like way better institutional traders than me. Listen, like, yo, I know we got some beasts. Like I don't know necessarily who we got on the call right now, but I know we've got people like Reem, people like Anissa, like everyone, like you just beast institutional traders, like Ashwin, everyone. But it's like you don't necessarily have to be like a beast institutional trader like that in order to catch these sales. All you need to be able to understand is wick rejection, market structure a bit, right? And then an institutional candle. What is an institutional candle? Again, like this is explained in the How Do I Trade course, but there's really, I would say, two main types, right? Two main types. There's probably more as well. There's probably more, but this is my simple way of looking at it, right? Two main types. Number one, we just have when we get kind of a pull in the opposite direction before the market pushes in the real direction. What do I mean by that? Here, we've got a little pull in the opposite direction before it pushes in the full direction. Because literally, the perspective behind there is that we're catching people out. So it's looking like, oh, it's going to be a sell, and then all of a sudden, boom, just flies up, right? So we've got those kind of institutional candles. They probably have a name as well. Understand, I'm not the most advanced when it comes down to names of things, that kind of stuff. I just see things. I just like to simplify things, right? So if that's the case, simplify things where possible, of course. If that's the case, the other way, the other type of institutional candle that I see is an FU candle. FU candle is one where, again, like we're seeing some kind of manipulation. Right? In fact, there was a good example on this on GBP CAD. Let me show you guys GBP CAD, right? GBP CAD is right here. So FU candle is where we literally have liquidity captured. So you might have like for example, let's see if I can just find a basic. Like this isn't an FU. In fact, no, you know what? I'm just going to show you a GBP CAD because I know there's a good example there, right? Check this out. GBP CAD. What do we have? We're looking for a sell. By the way, real quick before I move on, let me check the chat box. I'll answer any questions as well. This is making sense now. Jeez, let's go. GBP JPY looks good to trade. Okay, cool. Let me check that. For the rejection of the entry price, do you wait for two? I answered that already. AUD and ZD. I'm not seeing AUD and ZD on here. I'm not seeing AUD. But is that just like a normal random trade, or is it on the Harmonic Scanner? Because I'm not seeing it on the Harmonic Scanner right now. GBP JPY. No, I'm not. I wouldn't be entering this way unless I refresh it. As in, I'm not saying, by the way, that's not a valid trade to enter, but this specific training is about the Harmonic Scanner. But let me see. Let me see if there's a new scan. There's a new scan of GBP. No, like I wouldn't be entering this. I wouldn't be entering this personally myself. Let me see. Do you use pending orders? Yeah. Like, I don't mind using pending orders. Market execution, like it's more ideal though. It's more ideal because sometimes with pending orders, like the spreads, like there can be all these different issues. But the only time I really use pending orders is if, like, I don't know, I might be doing something. Do you know what I'm saying? Like that's one of the reasons why I don't necessarily even use this, like the Harmonic Scanner too much, just because it's like the only thing about this style is like it bangs, but it's like you have to check it here and there. Do you know what I'm saying? Like, there's actually a Harmonic Scanner Telegram channel. Like I'll try and remember to drop it in the group, or I aim to remember to drop it in the groups after. If not, then someone just messaged me or something. But there's like a Telegram channel where it literally just sends alerts when there's like a new H1 trade, so you can kind of check it there. But then you just need to be conscious and still check it, because it's like you need to kind of see, like, look for a breakup structure and that kind of stuff. It's worth it though, like if you have that kind of time that you want to focus on it, because you do catch nice trades. With market structure, do you mean identifying the trend on a 4-hour? I don't. What I mean by market structure is on a lower time frame, right? By the way, that is valid though. The 4-hour time frame is a valid way to look at market structure. But for this specific style of trading that I'm talking about, the Harmonic Scanner is giving me the long-term bias, so I don't need to look at H4 and all this kind of stuff. I'm just looking at the wick rejection, and then I'm looking for, like, as soon as I have the wick rejection, it's giving me the bias of where the market's going to go, which is to TP2. Because one thing that I find myself struggling with institutional trading myself is like having the overall bias of where the market's going to go. That's why I started using the Harmonic Scanner, because it gives me that bias. And I'm a bit better at catching those entries than actually having a long-term perspective, if that makes sense. That's why I started looking at this, because I was like, right, like, if only I could have something that could give me the perspective of the long-term entries and that kind of stuff. Yeah, lit. If only I could have a perspective of the long-term entries and stuff, that would be lit. So that's what the Harmonic Scanner does. Hopefully that makes sense. The question, AUD ends a D, it's 1 hour. Okay, cool. Let me have a look. AUD ends a D. Oh, all the way down here. I said, let's see what's good. Jeez, this was ages ago. Oh yeah. This is a mad trade. All right, so this right here. All right, this right here would have been perfect confirmation. What do we have? We have the wick rejection. Then we have the candle close in the right direction. All right. Then what are we looking for? Like we could even just enter a basic. I bring it like mad. We could even just enter on a basic level just from that. Right. Let's say we enter that stop loss just below the wick. Right. Hopefully this is making sense as well. Again, any questions, drop them in the chat box. I'm gonna go through all of them. And then you come up TP2, nice little 1 to 8, just from the wick rejection. Right. So what do we see here? Right. Why did we not enter here on the first entry price? Because it didn't have a wick rejection off of that entry price. You know what I'm saying? It came down. So we're looking for a wick rejection here. We got the wick rejection there. Could have entered stop loss just below the wick and taken it nicely up. If we're on institutional levels, probably could have taken even something madder, right? That's like 100 pips. So imagine catching on an institutional level. That's not too bad. I personally never caught that, right? But that's not too bad. So hopefully that's making sense so far. Again, drop any questions. I'll go through another example real quick as well. In smooth time. Jeez, hey, what, Kill, you caught that? Yeah, love that. Right, so let's see what else we got. We got AUD CAD. I spoke about that one already. AUD JPY. Oh yeah, I was going to speak about GBP CAD, right? So let's go to GBP CAD. I'm gonna get to GBP CAD actually. Let's go to it now. All right, cool. So GBP CAD, what do we have here? Again, stop loss is above. So we're looking for what? Sells. We're looking to get away from the lava, away from the stop loss, and towards the profit. So we're gonna look for sells. We have the wick rejection, and we have the candle closing in the right direction. We could really and truly just enter, just like that, right? Short position. Short position right there. Stop loss just above that. Yeah, cool, boom. And then we just take it right down, right? Take it right down. This basic strategy, like this is like the strategy that that I'm using sometimes about institution trading. I just call it DRS, the real strategy. That's what I call it, the real strategy. But no, as in like, so yeah, literally you could just enter them, or let's say you want to go on institutional, right? Institutional. We're looking to get that SMART-MONICS source, right? Let's go on GBP CAD. Let me clear this. Let's go on GBP CAD. Boom. 5 minutes time frame. What was the price? What was the price? Da, 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 da. And what was the time? I mean, the time was. The time was 9, right? So this candle closed at 9 o'clock, right? That candle closed at 9 o'clock. So now we're looking for entries around about that kind of time, right? Perfect. So 9 p.m. and this was around about here. So let's see what we can catch, right? 9 p.m. 9 p.m. Personally, I don't enter trades at 9 p.m. though. I don't like to, because the spreads can be a bit mad, especially for entering institutional trading. I only look to enter trade from 11 p.m. onwards, but we can look for the trade because the trade probably wasn't valid at that 9 p.m. time anyways, right? But just as a side note, right? That's really the only time I really don't like entering trades is like between around about 9 and like 11:30, just when the spreads go a bit mad. That's UK time, by the way. I think we've got some people in the States and stuff on this call as well. So let's see, the time was 9 p.m. UK time. So let's go to here. Let's get the vertical line and let's see what's good. All right, cool. 9 p.m. So around about 9 p.m. So this is where we had the candle close, right? So now we're looking for entries. Okay, cool, look, perfect. What do we see here? This is what I spoke about, the other type of institutional candle that I look for. Again, all I'm looking for is like that normal institutional candle that I showed you, right? Or an FU candle, right? Where we see some kind of liquidity get captured. So we see that, big spike up, FU candle, push back down, the last buy before the down move, right? And we have what? Again, I'm only entering if there's imbalance. If there's no imbalance, I'm not entering. Like I'll enter, but not based off that. You know what I'm saying? There has to be imbalance. Like that, for me, like has helped with the accuracy of entering these like institutional trades and stuff. So what kind of imbalance do we see here? We see this imbalance right there. Personally, okay, cool. So we have that right there. Okay, cool. So we had the candle close. Let me just shut down real quick. Right, cool, perfect. Now I was gonna say, because like if we had some kind of market structure break or something like that, this would have been a kind of entry that I'll be looking for as well, right? Like this, like because we had the last buy before the sell. The reason why this wouldn't have been valid though to enter is because we didn't have a market structure break really and truly, and we didn't like the wick rejection hadn't happened yet. You might have had a market structure break on lower time frames, to be fair, maybe on a 1 minute time frame or something, and you could firm that stop loss. Doesn't really matter. That's why I say again, like, because this, I probably would have entered this trade right here. Right? I probably would have entered this trade right here. But again, it's fine. You just firm some stop losses. It's not that deep, right? Just use risk management and then catch your high risk reward. Because you can hit like 3 stop losses, but you're going for a 1 to 10. You're seeing some of them 1 to 20, right? Let's say, for example, you're going for a 1 to 10. You're hitting like 3, 4, 5 stop losses. You're still up nicely on your account. You know what I'm saying? So check this out. That institutional candle there. Let's say we just go based on that. Short position. Enter at the entry of that. So we're entering at the mitigation of that buy to sell. Stop loss just above there. That's like 10 pips. TP, where's TP? GBP ones tend to be like relatively large as well. So TP here is what? TP here is what? 1.734. 1.734, right? Let's go ahead and drag that out. 1.734, right? 1.734 something, right? So let's put something like that. Nice little 1 to 10, all right? Nice little 1 to 10. Let's see what happens. Boom. So you can see how efficient this is. And then again, after TP1, we're moving stop loss to break even, right? After TP1. TP1 was where? TP1, 1.7387, something like that, right? 1.73, something like that. So something like, or somewhere around here, right? So after here, we moved stop loss to break even. It came back up, we came to entry. Let's say, for example, let's just say you wanted to even preserve your capital even more. And once you had this rejection around here, and you're probably around about 1 to 3 or 1 to 5 or something like that. No, probably like 1 to 3. You move your stop loss to break even there. That's fine as well. Then what do? You just go for another entry. Again, like, yo, we ain't scared. Like, don't be scared of stop losses, guys. Like, just enter again. Like, let's just enter more trades. You know what I'm saying? Like, obviously, so long as the confirmations are there. But let's say, for example, here, yeah. All right, cool. Let's delete that. So let's say we entered that one and we closed here at break even. What are we looking for again? We're still looking for more entries. Now I'm not really seeing too much on this time frame. So what am I gonna do? I'm gonna go down. I'm gonna go down to the 3 minute time frame, for example. Wait, hold on. Let me drag that line there just so I know where it was. Around about here. I'm gonna go down to the 3 minute time frame. And then if I don't see anything here, I'm gonna go down to the 1 minute time frame. Right? Simple as that. So what do I see here? Okay, cool. So first, again, like this is literally how simple I look at things, right? We have this right here, institutional candle. Last buy before the sell. Didn't come up to there, but that's going to be one area of interest that I'm looking at. You know what I'm saying? Then what else do we have? We have this one right here, right? Last buy before the sell. However, this imbalance had already been cleared around here. But yeah, to be fair, if you caught it here, like you would have had to been on the charts though, but if you caught it here, that would have been like a calm entry, right? Like around about this kind of zone. As I said, I don't normally enter at the body. I enter just before the body. And this is one of the reasons. Because you can see here that we would have been looking for it to come to the body, but it only came and literally just filled this imbalance, basically, right? So that's why normally I'll enter just a bit before the body. You know what I'm saying? Just to be able to catch that and to be able to account for spreads and stuff. But so you might have entered there, but again, that one right there is like, you would have had to been looking at that. You would have literally had to been on your chart for that 50-minute period, because otherwise you wouldn't have seen it. Like you couldn't have like clocked that one in advance. You know what I'm saying? So you might have caught it, but I'm not even gonna look at that one right now because you might have missed it, right? But then there's other entries that we could have caught. You know what I'm saying? Like literally, for example, here we had the last buy before the down move, and we could have caught an entry right here, right? Could have caught an entry right here. Now there's just so many entries that we can literally catch. There's so many entries that we can literally catch, right? Hopefully this is making sense. Like that's what I look for. Last buy before the down move, right? So this specific one, again, it would have had to be in one where we're on the charts. Why? Because that last buy, down move, the imbalance was here, and straight the next candle was the one that that the entry would have been on, right? Hopefully that's making sense so far though. Hopefully that's making sense to somebody, right? And again, let's go down to the 1 minute to see if we could have caught anything on here as well. But this is basically how I do it. That's basically how I do it. Okay, cool. Let's see. Okay, cool. I'm not really seeing too much in the 1 minute. Okay, cool. Boom. Look at this. I like this. So here, right? Last buy before the sell. So I'll be looking to enter right here, like in this kind of range, right? So probably around about here, or slightly lower and slightly larger risk toward. Again, just because I don't always enter just at the body. It depends on the stop loss. If the stop loss is like 9 pips or whatever, I'll probably just enter at the body, to be honest. If it's like 2 pips, I don't mind. I'll expand it a bit, right? Let me check the chat box real quick. Make sure everything's making sense for everyone. Do you trade open of London any time, to be honest? Just not the times that I just said, in terms of like around about 9 to like 11:30. But yeah, London session is sweet. Like for example, that was London session, 11 p.m. UK time. Yeah, UK time, 11:30 p.m. UK time. The real strategy. Come on, let's go. Yo, guys, just real quick, just drop a 5 in the chat box if this is making sense. And you guys are understanding like how to just implement like just smart money concepts, like using the Harmonic Scanner. This is one way to do it. Again, I'm not like the best institutional trader or anything. This is just one way that has been making sense for me. So I thought, like, because people are asking questions, I thought let me just break this down for people, because it's quite a simplified way of looking at smart money in my eyes. It's like you're not overthinking it. Like I don't just again, low risk, high reward. So you're just entering with low risk, but you're entering multiple times. If you miss an entry, doesn't matter, right? So for example, we didn't come up to here, we don't care, it don't matter, we'll catch more entries. You know what I'm saying? So don't be scared, because like when you're scared to hit stop loss, it's like you're just gonna be missing bare trades. But also, don't just be entering trades randomly. Only enter. That's why I make sure that it has to be an imbalance. Do you get what I'm saying? So hopefully that makes sense. So for example, here, like the imbalance here would have been like this whole thing was imbalanced before it came up. So if we were on the charts, then we were probably I probably would have set a penny order like around about somewhere like this. You know what I'm saying? And just waiting for it, and then it came up. You know what I'm saying? So hopefully that makes sense. The best entry was the first one that I showed you on the 5-minute time frame though. So if there's something clean on the 5 minute, I would go for it. All right. Yeah, like hopefully that makes sense. Like I don't know if like that's enough. Hey, man's fired up. Let's go. Let's go. Love. If you guys want me to go for another example, let me know. There's better examples I can go through. Or if you feel like it's making sense and it's like you just want to go ahead and implement, let me know as well. Like this training is really for you guys, so it's really up to you if you want me to do another example or not. Because I know we've been on here for like an hour. You can go with that. One more example. All right, say no more. Let's see what we got. So we went through GBP CAD. Like I think I skipped some. So let me go through it. I call AUD CAD, AUD JPY. All right, cool. Yeah, let me show you AUD JPY. This is a good example as well. So AUD JPY, right? AUD JPY. Here, we didn't have a wick rejection, so we wouldn't have entered. You know what I'm saying? By the way, one thing I'll say as well, sometimes harmonics is like math space or whatever, right? It's like Fibonacci and all that kind of stuff. Sometimes, like, the harmonic might be here, and then it might come up a bit, and then it might actually move down to here. Do you know what I'm saying? Like, it might shift, and that's fine. It doesn't really matter, because it's automatic. As the market shifts, the harmonic sometimes shifts just to account for the market, right? And if that's the case, like, I'll still count. Let's say, for example, into there or whatever, and it hit stop loss or it hit break even or whatever, then I'll still re-enter. You know what I'm saying? Well, hopefully that makes sense. But then if it's hit stop loss, I'm not entering. If it already hit stop loss, I'm not entering the trade. All right. GBP NZD. Again, this one didn't hit the entry point. All right. NZD CAD. I think I went through this one already. Didn't have a wick rejection. Right. Didn't have a wick rejection. Personally, I want to see the wick rejection. The only way I will enter just from market structure is if we're already having some kind of wick rejection. It might not be the strongest of wick rejections, but it has to be something, like some kind of wick rejection. But I prefer a strong wick rejection, if that makes sense. Let's see what else we got. Euro JPY, I think we went through this one already. Yeah, we did. GBP CAD, went through this one already. Euro USD, okay, cool, missed. Like that. See, you can see that some trades will miss. Like, don't get twisted. There'll be a lot of trades that will miss, but it's all about just having the right mentality and just sticking through it. Right? Here, for example, this would have been a missed trade. I wouldn't enter this. Why? Because the candle closed above the entry price. You know what I'm saying? Or Euro AED. What else we got? Here, I wouldn't enter this, right? I wouldn't enter this because the candle closed below the entry price, right? And I don't mind. It's not even the only kind of way that I trade the stuff. So it's like, it's just have an abundance mindset. That's one thing I'll say. We got AUD USD right here, right? AUD USD, wick rejection, candle closed in the right direction. We're looking for a buy. Why? Stop loss is below, right? Stop loss is below. Now we're gonna get this, and let's say again, just entering off the real strategy, DRS. Let's go. Jeez, DRS, you know. Anyways, yeah, let's say we're just entering off that. Boom. Go for TP2. Move stop loss to break even at TP1. This is like the simplified version. right? Nice little 1 to 3. Let's say you want to go on institutional levels. Well, this was like the 12th of August. Let's see. I think the 5-minute time frame should go back to there. 12th of August at the candle closed at 9 a.m. Right, 9 a.m. See, as you can see, London session is quite hot. AUD USD. Let's clear this chart. What's it? It's 12th of August, right? 12th of August. So let's go to 12th of August. Go to 12th of August. And we're going to go to 9 a.m. Perfect. Wait, did I go? Ah, cool. Somewhere around there. Right, let's see. So 9 a.m., 9 a.m., 9 a.m., 9 a.m., 9 a.m. So this is around about here. Let's get the vertical line just to show this visually. Let's see what we've got. All right, cool. 9 a.m. So this is where we had that candle close in the right direction. So now what we're looking for? We're looking for some kind of way to enter on an institutional level. Start on the 5-minute time frame. Looking for a break of structure. We already had a break of structure. Why? High, low, high, low. This I wouldn't count as a high. Some people that say, oh, we need to wait for this high to be broken. No, this is the high because there wasn't a new low for. The high that I'm looking for is this, right? Boom, right? This. Either this or even this, to be honest with you. I can't like even this. Reason being because it came down low. But I prefer this one, to be honest. I prefer this one. So look, we're looking for a breakout. We had the breakout right there. Let's see what kind of entries we can catch. So look, what do we have here? Last sell before the buy candle. Right? Last sell before the buy candle. That's our area of interest, right? We have what? Do we have imbalance? Yes, we do have imbalance. Again, if there's no imbalance, I'm not really favoring the trade. And that doesn't mean that it won't hit, but it's just based on the way that I like to do it. I don't like to enter that, right? Stop loss, just below. All right, cool. So look, boom, entry here. All right, stop loss, just below the wicks. So just below there, right? Leave it a little bit of room. And then TP, where's TP? Ooh, TP 0.7156, 0.71583, right? 0.71583. 0.71583. Right, cool. 0.71583. So this would have been like a cheeky little 1 to 6 or whatever, right? Little 5 pip stop loss, right? Decent, right? Nicely done within what? How long is that? I don't even know. Look, it looks pretty quick. It looks pretty quick. Oh, yeah, let's go to the measurement tool. Right, that's in like an hour, right? So nicely done within like an hour, right? Decent, nice, sweet one, right? Sweet one. So that's AUD USD, and then again we could have also caught that entry, which would have been like half the risk to wood. Is this recorded? It kind of is. I don't know if I kind of just recorded it just in case because kind of couple people asking. I might upload it. Message me or something. Can I draw a support and resistance box around the entry line? You can if you want. I don't, just because it's like, I just used, like, I literally just use the entry line as a support resistance line. Like, as in, I don't even, you know, I don't even know what's going on around the chart over here. I don't even look at it that far. All I look for is the entry line. Like, I look at the stop loss. The stop loss is below there, say no more. Wick rejection, say no more, let's go. Like, that's literally it. That's literally it. Right? Okay, well, as you said, who's ready to implement? Let's go. After you finish Smart Money course, let's go. First high or highest wick? First high or highest wick? I don't think I understand that question. If you maybe reword it a different way. Thanks for the info. I'm new to the team. Yo, let's go. Able to go through imbalance. Yeah, say no more. So when it comes down to imbalance, yeah. So just as a simple explanation, right? As a simple explanation, let's see. You know what? Let's go through like a nice, because this was like a simplified way of explaining this, right? Let's go to this one. Imbalance, right? The concepts of imbalance is basically saying this, right? I'm not going to go into too much detail because it is in the Smart Money course. That's where I learned it. Like, I learned it from the academy. I learned it from people like Reem, people in the team that have helped me. But really and truly, like, the education is really what's going to help you, right? So check this out. Imbalance is basically this. How can I even explain it the simplest way, right? We just have a gap in the market, right? I'm not even the best at explaining the balance, to be honest with you. Right? That's why you need to go to the educators. But I would say the way to describe it, like the way that they describe it is like, let's say you have like a pen and you're scratching on the paper and that kind of stuff. There's going to be these little gaps. The gaps have to be filled, right? The way that I basically see it is that there basically always has to be a wick, right? There always has to be a wick, right? I just explain things in a simple way, so I don't know if this makes sense, but you see right here, there's no wick here, right? There's no wick here, right? There's no wick here, and there's no wick here. That means that the price has to come back there. Like literally just by default, typically the price has to come back there. The price has to fill. That's what we call an imbalance, right? Because you can see that most of the times, if let's say for example, there's like most of the time there's a wick on both sides of a candle, right? So there's wicks, there's wicks, there's wicks, there's wicks everywhere. The moment you see that there's no wicks, typically the market comes back down, comes back up to it, and sometimes rejects off it, or sometimes just clears it. But again, I'm not the best at explaining that. I'm not gonna lie, that explanation was probably whack. But as you go through the institutional course, they'll explain it a lot better, a lot better. Yeah, look, Sam explained it way better. Imbalance where there's only one type of pressure. So it's like because there's only sells. Like for example, here there's only sells being offered. There needs to be sells and buys. Do you get what I'm saying? There needs to be sells and buys, right? So Sam explained that perfectly. I know it's on the top. Do I trade HFX? Yes, HFX be lit. Yeah, I trade HFX. I'm learning HFX right now. Yeah, man. Shout out to HFX. Shout out to HFX. Does anyone else trade HFX in it? Cash Trap. I don't use Cash Trap, you know. I've used Cash Trap here and there. I've personally been looking at Arla on Go Live. I like the way that she trades. So like that's basically how I do it. Like basically just support resistance, waiting for a breakout and all that kind of stuff. But yeah, man. Hopefully that makes sense when it comes down to Harmonic Scanner as well. Let's see if there's any other. Yeah, I think I went through all the examples. I think I didn't click on USD CHF. Let's see what this one's saying. Oh, this one's looking like an old one. This one is old. I'm not even gonna go. This one is bugging. All right. So I went through all of the ones on FX Trace right now. So yeah, hopefully that makes sense. I feel like I can start on share right now. Yo, guys, if you got some value from that, you know what I'm saying, drop a. Well, what number? I don't remember what number. I'm gonna say 7. I know I skipped a couple of numbers, but let's end up on a 7. Drop a 7 in the chat if you got some kind of value from this training. If you're ready to actually go ahead and implement this stuff, let's make it happen. Jeez, I've seen one of the 7s coming through. I'm seeing some 8s. Some of y'all don't know how to count, but it's all good. It's all good. So as long as y'all hitting these prompters, y'all. But listen, as you guys implement this, like therefore let me know. I'm excited to see your progress. I'm excited to see your growth. I'm excited to see you guys catch some of these trades. Honestly, it's powerful combining the two together. Yo, it's just crazy, man. It's crazy because the Harmonic Scanner is such a powerful tool. Will I make more trainers? Honestly, yo, the best place for trainers is really Go Live. Like Go Live is where I learn everything. You know what I'm saying? This is like my way of really explaining things. Like all what I've just shown you is a combination between Rock Kuma on Go Live and just looking at the Harmonic Scanner. Like that's basically what it is. Like I just learned for Rock Kuma on Go Live, and some other educators, but like mainly for institutional, I like to watch Rock Kuma. So Rock Kuma, learning how he looks at the market, like that's where I learned the breakup structure from. So he speaks about the breakup structure on like the 1 minute, 5 minute time frame, that kind of stuff. So from there, and then just putting that on the Harmonic Scanner. Do you know what I'm saying? So that's what I would say. Like you want to learn from the pros. Like these Zoom calls and that kind of stuff, they're all cool. The only reason I really did it just to help you guys know how to use it with the Harmonic Scanner. But in reality, the source is Go Live, guys. The source is Go Live. So let's go plug into Go Live. Let's go plug into the academy and all that kind of stuff. Maybe I'll like record this. Matthew Fayer on HFX. Is that who you're talking about? From Bounce Back. I don't think so. You know, he's not on Go Live, is he? Is he like one of the students? Is he like one of the students? But yeah, that's it. Listen, let's get it. I appreciate y'all for plugging in. And yeah, man, let's make it happen. I'm gonna catch y'all soon. Peace.